Good morning students, welcome back to today's class. Today we are going to see Accountancy chapter number 7, Depreciation, Provision and Reserves. This is video number 14. And today we go to solve one numerical problem. This is question is illustration number 2, but we solving as at illustration number 3. That means we can see that first question. Question is MS Mehra and Sons acquired a machine for rupees 1,80,000 on October 1st 2016 and spent rupees 20,000 for its installation. The firm writes off depreciation at the rate of 10% on original cost every year. Record necessary journal entries for the year 2017 and draw up machine account and depreciation account for first 3 years given that. One thing, the books of accounts closes on March 31st every year, and second is that the firm charges depreciation to not asset account. There we change the term. We create provision for depreciation account. You got now? There we are not writing not the same question. Means in your textbook it is given that charging depreciation charging to asset account, but instead of that your depreciation provision for depreciation account is maintained. Got changes now? Yeah. So first of all that we need to analyze that question. While analyzing we come to that one machine is purchased. That machine cost rupees 1,80,000, which purchased in the month of 1st October 2016. And to make it ready for its installation charges, they paid rupees 20,000. Clear now? That we assume on the same day itself, even though date is not given. So we assume that is in the same day, that is 1st October 2016. And here it is asked, we need to pass the journal entries for that year. Which year? 2016, end of that year. And rate of depreciation is saying that 10%. 10% depreciation is charging to the asset. Clear now? And we are also asked to maintain a machine account, depreciation account, provision for depreciation account. Clear now? These 3 accounts, that means ledger account we need to show. Also 1 year journal entry, that is first year. And another is saying that here provision for depreciation account itself is understand that we are doing according to provision for depreciation, not directly charging on the asset value. Clear now? We are not charging directly to the asset value. Instead of that, we are maintaining a provision for depreciation account. And this accounts we need to show for 3 years transaction. In accounts, ledger account we need to show 3 years transaction, and in journal entry only 1 year. But here one notable thing is that this is not purchased in the beginning of the year. So very clearly it is saying that financial year is closing 31st March. So this is purchased on 1st October 2016. So end of that year is at 31st March 2017 is at the end of that year. So on this day we need to show that accounts. That means then we calculate that is how long months are there from October to that time. Then you know that there is only 6 months time. Clear now? So we are going to solve this. I hope all of you understood that what I said. So first we are going to pass the journal entry. For journal entry, when you are passing, all the format is compulsory. Okay. So first is a purchasing of asset. When asset is purchased, we pass that asset account is increased. That is why asset account. I didn't mention that format. That means you are not allowed to do the same way. Okay, when you are making, format is compulsory. Asset account, debit, you bank. Amount is at 1,80,000. 1,80,000. Next is at installation charge. That is also we mentioned that asset account itself. 20,000. Amount is 80,000. To bank or cash. And one other thing is that your date. That is 1st October 2016. The same date is here. Clear now? Now we don't have entries up to the end of the year. In 31st March 2000, this is 17, 21st March 2017. That is our accounting year, financial year, entry time. Okay, not 31st December 2016. Instead of that, we started from, you understand that first year. If it is saying that accounting year or financial year is ending with that 31st means we start from first year. Okay. Normally we consider like this. Next, on that day, what is German dream? Depreciation. Depreciation amount, debit. Which account?
Provision for depreciation.
Yes, provision for depreciation, not directly to asset. Our question answer that the question there we change it. That means we need to show a provision for depreciation. So we write that down. Provision for depreciation. Short I mentioned, but you are not allowed to mention like that short forms. Okay, this is provision for depreciation. You got now PD. I mentioned as a short. You are not allowed to use that abbreviation. So we need to find out that depreciation. Now our total asset value is at not 1,80,000. Asset value using that asset account is debited with the 1,80,000. Again asset is debited with the 20,000. Now total asset value is at 2 lakh. It's 10% is at the beginning. How much is there? This is 20,000. And this you know that for 1 year we calculated this is for 10% depreciation means that is per annum. Clear now? That 10% depreciation here we understand that this is for 1 year. But here we purchasing this is only on the 1st October. 1st October you can count that October. October is at the end of that October. Then October. Why we count October? Because this is 1st of October we purchased it. So we count that October also. October, November, December, January, February, March, April. March up to March is enough. Up to March you can see that 6 months are there. You understand now? So here we take that half charge, that means 6 months. How much is that? It's less than half. 10,000. That means 10,000. So we write here against the depreciation we write that 10,000. Here all narrations are required. Okay. Then for provision for depreciation also we mentioned that 10,000. Clear now? Next is at the same day. Here we mentioned that depreciation charged to the asset account or to provision transfer to provision for depreciation account for 6 months period. That's very important, for 6 months period. Clear now? Next is that the same day. E&L account. Here also I write that the short form you are not allowed. Provision for provision account debit. How much rupees? 10,000. the same 10,000 we transfer. And which amount we are crediting to
Depreciation.
depreciation. And how much rupees? 10,000. So with this, our journal entries are completed. You see that how is our journal entry? What changes were taken place with the first exam. Here, main change is that this thing, provision for depreciation. In previous question, we directly charged it to asset account. That means we credited that asset account with the depreciated value. Now we are not doing that. That means in the book value, asset value is still 2 lakh. When that will change, when we reduce, this is actually provision we created. That means one time or some time after we need to reduce that amount from the asset. When we do either on the end of the financial year, end of the useful life of that asset, or otherwise when we are removing that asset. We put in use that asset, and when we are not using, we are disposing that asset. Now hereafter we are not using, we are selling that asset. In that time we charge this provision for depreciation to asset account. In which year that is happened, up to that time we maintain provision for depreciation. That means asset accounts are not disturbed with its depreciation. Got clear now? In the coming classes you will understand. You don't need to worrying about that. Now you understand that here we created a provision for depreciation instead of which account? Asset account. Instead of asset account. Okay. This is actually we need to mention that asset. So for that asset we created a provision. This fund, this 10,000 we already kept aside from our profit or loss account. From the profit or loss, whatever is that, we took that 10,000 and we kept in a separate shelf for Almana. You got clear now? If for example in your house a function is going to be taken in the 2 years after or 3 years after, then your parents, you know that part of their income are keeping aside. They are saving that. They will not raise that money for any other purpose. They will use that money only for that particular event. That is very common in our side. That is very common if we are arranging some function, especially marriage and all, or when we are constructing houses and all, we already arrange that money. Then maximum we will not take that money for any other purpose. So the same thing only here also. We give that name is that a provision for depreciation. You understand now? So we gave one technical word here. Understood now? So that money we will not use. This 10,000 we already kept from our income, and then that we will not use for any other purpose. Our purpose is that this must be used only for the writing of depreciation of that particular asset. Which asset or which asset we created for that asset only. What we use this amount. Clear all of you? Until that time we will not use this amount. So now from our income we are already kept that money aside. Clear all of you?